This is Andy Paulini from the AICPA.
Thank you, Miklos. For those of you who don't know me, some of you are probably getting sick of me because Miklos is always kind enough to give me the opportunity to speak to this group about the work that the AICPA is doing in the area of making sure that the audit profession and the accounting profession stays relevant in a changing world. And that's really the focus of my team. We focus on a number of things related to emerging assurance and reporting practices. And I think of most interest to this group is the work that we do under the Assurance Services Executive Committee, which Bill is the chair of, and he just covered for you. We are very fortunate right now to have Bill as our chair. He has brought a lot of thought leadership to us and really brings connectivity to current practice that provides us with an opportunity to really start driving some change. And, you know, we've been going after this stuff for a long time. Everybody keeps talking about the Red Book, which is even before my time. But we've always had this topic of continuous auditing and continuous monitoring as an objective for the long term. Now what we're doing, which I think is really going to be effective for us, is focusing on small steps that help to get us where we need to go. And so the projects that we have articulated under the Assurance Services Executive Committee, especially the two that are part of our Emerging Assurance Services Task Force that have been mentioned here today. First of all, the Pink Book Project, that Greg and Trevor and Tom talked about this morning, as well as the Audit Data Standards Project that Bill covered that we're going to dive into more detail on. They really help us achieve some realistic goals that help the profession to move forward and do things a little bit differently, not only embrace new opportunities, but also do things that they already do in a new and better way. So with that, I wanted to give everyone on the panel a chance to introduce themselves briefly. We have a very diverse panel, so we have lots of different perspectives represented here. Once you guys introduce yourselves, I'll field some questions so that they can share their perspectives, and then we'll definitely leave some time for the audience to ask questions. So we'll start with you, Brad, and just go on down the line.
All right, I'm Brad Ames. I'm with Hewlett-Packard. I'm an internal audit director, and I have a group of audit innovation members and staff that help us to advance continuous monitoring, continuous auditing techniques. And my identity is professional practices, and the idea is to get common practices and common technology together, not just for internal auditors for use, but other assurance providers in our compliance community within HP.
Great. Thank you, Paul.
Great, thanks. Hello everyone, Paul Pasuti. I'm with SAP Business Objects. I'm our Vice President responsible for our finance, governance, risk and compliance portfolio. So the way that we typically look at GRC and audit is that it fits into the overall umbrella of finance and the end-to-end process. So the group that I lead is our Center of Excellence, where we have folks that are working with customers, with audit partners, with the industry to be able to understand what the current challenges are and then how we can apply those solutions to those. So spending a lot of time working with companies like HP, on the governance, risk, and compliance strategy, and the best way to use technology in order to help facilitate that process.
My name is Carl Bush with Ernst & Young. I'm in our professional practice group within our Americas area, focused on a team called Audit Tools and Techniques. So we're looking to basically see how technology can help enable our audits. We come up with new ideas from our field offices, as well as working with national and standard setters to help come up with new ways to apply technology to our audits. Started my career with Ernst & Young in data analysis, so it's been something that I've done throughout the years, and it's good to be able to work on this AICPA committee to help come up with the data standards to support what we're talking about today.
I'm the same guy I was this morning.
Ditto for me.
That's cheating. All right, I'll let you off the hook. I'm going to start with Carl, actually. Bill spoke a little bit about the Audit Data Standards Project at a high level. But Carl, why don't you help us understand a little bit more detail around why this project is necessary and the kinds of problems and challenges that auditors and internal and external and management even face that this will help to solve?
Sure. I'll start talking from the external audit perspective. Historically, we've always had a lot of problems when we're trying to get data from our clients. Not necessarily schedules. They have systems that can produce those schedules for them fairly easily. But when we're talking about the raw data, getting it out of their ERP or general ledger systems, that's always been a challenge since the beginning of continuous audit efforts, when we looked at how we can get access to that data, as well as with standards such as ISA 240 or SAS 99. So throughout the years, we've had a hard time getting that from the client. Bill touched on a lot of reasons why that is. Some of it is it's large data that the systems don't necessarily want to export. They're, again, looking to create reports for the end users of that system, not necessarily giving access to that source data. Other reasons are it's large volumes of data. Other things are our request to the client is usually to the CFO or to their financial designees to request this. Bill mentioned the prepared by client package. So they can support most of what we request there, but when it comes to give us the raw data to support all this, they hand that off to IT. Well, IT doesn't always understand exactly what we're looking for, so there's oftentimes a disconnect there. Other things we've seen is traditionally the person from the external audit team that's making this request of the client is not necessarily someone who's that familiar with what that data should be anyway. So there's a lot of different parties involved here, so sometimes clearly articulating what we're looking for is a big part of the challenge. Other things, when you do spit out the data, making sure we get it validated to make sure, number one, it's complete, because it represents 100% of the transactions and show the balances that we're actually auditing too. That's our biggest challenge, and so sometimes we do get the data out of the system and it gets passed among the correct people, and when we finally get our hands on it as an external audit user, we look at it and it's incomplete or missing fields, and then we have to go back through the process again. So historically, we've had a lot of problems there, as well as timing. This is a tedious and time-consuming process, which is typically done at the end of an audit. So throughout this cycle, we end up having data that we can't necessarily use that took a long time to get. So that's where we've been in the past. So I think that's one of the key reasons we need to come up with a standard that system can support, and it's always going to be the same request of our clients.
And Carl, since you've been an active participant in the development of the draft audit data standard, which by the way is still in draft format, so we don't have it out posted publicly yet, but we have a pretty solid draft developed. We're just making some final tweaks, getting some different audiences involved. But Carl, since you've been a big part of the development of that, could you elaborate a little bit more specifically on what's included in it, what it covers?
Sure. Like Bill said, it's more of a framework. We're starting with the general ledger data. It's the easiest to articulate what we're looking for, and it's easy to find quick uses for that, and it's something that we're already requesting as audit teams. So we start with the general ledger, and we define exactly what fields are requested. So it's typically a journal entry. All the journal entries within the system, so what fields are required there. We had to take into consideration things like different currencies. So is there a reporting currency? Is there a group currency? Different items to make sure that we have all the information necessary, as well as which business segment or what hierarchy of business segments do we have captured in there. So we defined all the general ledger data, plus there's some supporting data, such as who are the users that posted those entries, what were the sources, so the code within the journal entry, what system does that equate to? A few other pieces of information like that. We also mentioned metadata, so we are asking, it's more of a survey, if you will, or the business rules around how these transactions are processed and how the different systems feed into the general ledger. So that questionnaire is part of this draft standard. And the last piece, I mentioned validation before. We want to make sure that validation is a component of the actual extract of the data. We don't want it to happen way down the line once the user of the data gets it. We want it to be done at the time that the data is pulled out of the system. So we do define some validation or some data profiling within this data standard. So we're starting with the general ledger. We're going to get this draft hopefully published and start working with the different software providers, ERP packages such as SAP, Oracle, JD Edwards, Microsoft, to make sure that they can show how to do this and eventually, hopefully, embrace it and make it part of their system, to just press a button to extract that general ledger data. Moving past the general ledger, we're also going to be defining the same type of standards for sub-ledgers such as receivables, payables, and so on.
Thank you, Carl. moving on from there and building on what Carl said, Tom, would you mind elaborating a little bit on how all this can really benefit the quality of the audit?
Sure. And I actually have some experience with this because when I was a senior accountant in Pittsburgh, there were probably 4 or 5 of us that used to do a lot with the firm software audit tape, and then a couple of us had been in grad school and had probably 1 or 2 statistics classes, so we actually used to do more then than I think we're doing today. But one of the things we discovered was, why don't we write a routine to put the client's data into a common format for ourselves so we can just use whatever inventory applications we have. So this really is going to work if we can make it happen, because it did increase the quality. I knew that the applications we had, I didn't have to look at them and review them to see if it was coded properly. We just ran them. It was a battle to get the data pretty much every time, but once you got it. And if you want to get the attention of the public accounting firm leadership right now, it has to be about quality. Again, this can't be about efficiency or saving a couple bucks. Hopefully it will down the road, save our clients money, but first and foremost, it's got to be quality. I think it also would help on the timing. If we know that we've got a reliable data set out there, as Bill said, if it's getting updated every night, we don't have to question the reliability of what's there. We know it's got integrity. We know how to use it. And I think one of the big benefits is it'll really enhance the IT savvy of our people. And I would make one comment about the millennial generation. You would think that they're probably going to be good with technology, and they're very good at putting embarrassing pictures of themselves on Facebook. But they don't understand data, and they don't really understand systems and system architecture. So that's going to be a bit of an education for them. But I think this would go a long way to help that.
Thank you, Tom. Switching gears a little bit, next I'll call on Brad to talk a little bit about how this would be beneficial from the internal audit perspective.
Well, so I kind of relate to what you were saying, but what kind of happens is we have so many disparate systems that responding to the request, the PBC request, it takes a dozen applications, and you got to pull it together, scrub it down, make sure it has integrity to it, get it complete, only to find out that the audit was delivered yesterday. The timing of that and the access to the data is so complex that it makes it very difficult to do things like continuous monitoring even. And the reality is, if you're going to go to continuous auditing, continuous monitoring, you really have to get that data management competency down. So what about a year ago, what we ended up doing was enabling or building out a database. The standard refers to it as an audit data warehouse. But the database is to give access to trusted information that would be used by trusted people to decision risk, to make decisions about risk, not just auditors, but inside the compliance community and controllership that would make actionable decisions on risk as a result of this database. And so we've been working this out for about 3 quarters now, and then that would be accessible through the website. Well, it turns out this audit data standard actually enables us to set that expectation with the external auditor. So we're building the data warehouse, or the what we call a decision support analytical service, under the standard of the audit data audit data standard, so that other benefactors like the CPA firms, the external auditor, can use that data as well.
Thank you, Brad. Now moving on to Paul, from the vendor perspective, Bill talked about it a little bit, Carl, you covered it a little bit as well. We have to think about how we're going to implement this in terms of packages that people already use, and make it feasible for the preparer community to make this possible. So, Paul, if you might talk a little bit about the level of effort that would be required from an ERP perspective to get this built in, what the different options are.
Yeah, definitely. I mean, from the ERP, there's really 2 sides. I think when you look at software today, there's what's inside the ERP, inside those back-end systems that you're running, whether it's SAP, Oracle, JD Edwards, whatever it might be. There's been audit functions going on inside those environments. Then there's, of course, external software that's been made to interact with those environments and plug into that. From an ERP perspective, and the more times we can leverage data standards and take advantage of this, the better off we're going to be. I'd say probably the fastest growing part of what we're doing now is around data quality and what we call enterprise information management. That's about getting data from different sources into the ERP environment, cleaning it up so that you do have trusted data so that you can make confident decisions. So implementing data standards into that process within ERP and then ultimately within, say, an audit management capability within that environment, even then for external, say, GRC, internal control, continuous monitoring tools, that's in our best interest and in all the ERP the company's best interest to make that as easy as possible. I mean, in looking at it, that's something where we can do a patch to be able to apply those standards into what we're doing today. So technically speaking, not very challenging to have those standards interact with the general ledger with the other part of FICO type of systems inside of an SAP or Oracle or other systems. So, knowing that the other vendors too are looking at best ways to do that. I mean, we're dealing with different standards in different areas, whether it's XBRL, IFRS, etc. It's something that we would welcome and has already been thought of as how to make that as simple as possible through a patch system.
And what about the cost? Because one of the biggest questions we get when we say we're going to do this is, isn't it expensive? Isn't this going to be a huge cost to the preparer, or isn't it going to be a huge cost for the vendors to implement it, and who's going to pay for it? That's one of the biggest barriers that we often hear about. Is that a perceived barrier or a real barrier?
I don't think it's a real barrier as much as perceived as to the actual cost, because I think the benefits are going to far outweigh any of the costs to actually make that a reality. Anytime we can get to using data standards, we're going to see costs and return on investment. Really, it'll be there over the long run. So from a total cost of ownership perspective of doing this process with the data standards, we think it's more of a perceived cost. I mean, from a vendor side, we're willing to invest in utilizing these standards and building that into our practices, because it does create efficiencies down the road. Where I think it is for both external audit, internal audit, it's the visibility that I think that it's going to provide by using the systems that are in place for audit, for GRC, that are going to create a lot of that's where the cost benefit is really going to come in. I think by providing then visibility into the key risks, the controls, what's happening during the audit to different departments within the organization, even outside of, say, the traditional areas where it's focused, is going to be just a huge savings. I mean, when we work with companies, typically the biggest challenge we hear from a CFO or a COO is that as they're putting together a strategic plan and they're putting goals and initiatives together, they don't have visibility into what some of those risks are, the material weaknesses, what could help, what would throw me off my plan that I've just spent a week with the board putting together. Forget about a 1-year plan. How do you do a 5-10-year plan if you don't have a good sense of the visibility, if you don't have visibility to those risks and those controls? So I think it's something we're willing to invest in. I think the cost to the outside community is going to be very minimal, and the benefits will far outweigh the cost there.
Thank you for sharing that perspective. And the point you made about risk is one that we talked about a lot yesterday in the CarLab board meeting and in the Friends and Family meeting yesterday afternoon. Really, there was a lot of discussion about the value proposition from a risk perspective of starting here and building upon it to do, the kind of monitoring and analytics that it would really enable. So I think that's a huge theme that we need to keep our eye on the ball, because if we don't explain the cost benefit, we will have a problem with adoption. But I think the cost benefit issue is in the favor of getting this done, and
absolutely,
if we articulate it correctly, we'll get further.
Amy, to add on that, we saw on some slides this morning talking about ROI and who's sort of taking the cost there, and usually it's going to be the company that's implementing this. But when you have a standard and you have all the different stakeholders that would find use in this data, you're going to sort of spread that cost conceptually. But if you can find that initial ROI to sort of sell this and make sure you have everyone at the table to make sure that their needs are met, you're going to get a lot of benefit for that single cost.
Yeah, and that's why it's that visibility across those departments, even inside one particular organization, outside of the software vendors and the audit partners, inside of a company itself, looking at the benefit that you get across different departments and getting, understanding those key risks by department and then rolling that up to more of an executive view. That's going to be huge as well. And then we're making moves as are other companies to speed up the way that we get that data out of systems, because it's very rare that a company is running one ERP environment globally. It's almost impossible to do at this point, at least not one instance. But how do you get that data out, make sure it's cleansed, and get that very quickly? In fact, we're moving to more in-memory databases, so that what used to take, say, a week to extract that data, you're getting in seconds now, based on taking things out of a traditional database and putting it into an in-memory environment.
Great. Thank you for the discussion, guys. And I did want to turn to Greg Shields as well at this point and kind of switch gears again a little bit to give you guys a different flavor of all the different perspectives that we have on this panel. And Greg, asked you to talk about this in terms of your viewpoint from the standard setting perspective. Any insights that you have, and also we've talked a little bit about the fact that we're starting with GL, we're building to subledger, but is there an opportunity to expand to other data as well when we think about the data standard?
Yeah, I'm not sure I have to say maybe insights, but I must admit when I first looked at it, I saw this as largely an efficiency issue. And standards don't deal with efficiency, we deal with quality. Tom's words gave me some comfort. I was hoping that even today, if auditors are having trouble getting the data, they'd still do whatever they did to make sure it was reliable and accurate before they started relying on it. And that's, to me, an efficiency issue. And in the standards world, we also don't tell auditors what they have to do with the data. Like we don't mandate stat sampling in the standards I know. If you want to sample, that's fine. And when you do that, then you have to do certain things. But you're free to do 100% analysis or whatever. So we don't get into the efficiency issues. I guess my concern comes from a point of view of just what data is being covered. And I realize that this is just, as was Chris Rossi pointed out this morning, every meal starts with a small bite. And I see this as a very small bite. I guess from an auditing standards point of view, I'm a technical advisor to the International Standards Board, for the CIC member on that board, and I'm also on certain task forces. We respond as an international standards setter to each international financial reporting, international accounting standard from an auditability viewpoint. And you realize the evolution of accounting standards makes this whole concept of data, I think, quite complex. For example, we were talking about a simple piece of data, transaction price, but if I look at the IFRSs, I almost have to read this out. Transaction price would reflect the company's probability weighted estimate in consideration of a number of variables, including discounts, rebates, credits, incentives, credit risk, and the time value of money. Can you see all the data that's coming into the basic revenue recognition decision? And here we're talking about, I think, a little piece of, maybe a misconception, a little wee piece of routine data. Auditing standards try to focus on where is the big risk of material misstatement and where auditors have to do a much better job. And to me, it's not really routine data. You can't ignore it. It's got to be the starting point. But that's not where the big payback is. It's going to be in all these masses of data that go into these significant accounting estimates that underlie just about every element of the financial statements under IFRS and probably US GAAP. So, and I realize that's not contradicting where this project is going. You have to take small steps, but we're talking here about masses of data from inside the company, outside the company, and reliability data from all these sources can't be ignored. And the other thing is, and I know the US ASEC recognizes this as well, that the audit is evolving. There's an international initiative called the Integrated Audit that's going to integrate the financial statement audit with sustainability audits. So they're going to deal with financial and the social responsibility, economic impact of organizations. And will that have legs? I mean, as we said this morning, I thought continuous external auditing would have legs. I think this one does have legs because it's backed by regulators, it's backed by corporate entities, it's backed by standard setters. They've got the group at the table that's going to drive this. It's already mandated in South Africa, and that's not a big jurisdiction. But I'm just saying, once we expand the whole scope of the audit, the mass of data is almost infinite. So I'm not trying to discourage the project, but I'm just saying this whole data reliability thing is massive, and this is a useful but very, very small bite of the whole huge apple.
It is a very small piece, and I guess that, over the years we keep biting off smaller and smaller pieces because we're trying to make progress forward, and so this is a starting point, but certainly on my team within the AICPA we do have a vision towards the broader reporting model, so not even just expanding out to financial reporting, but to non-financial reporting as well, not just sustainability in the CSR sense, but the broader sustainability of a corporation to create value into the future. So, we are looking at that broader reporting model, and so this Audit Data Standards project is one project that we have under the Assurance Services Executive Committee, but we have another task force that's focused almost exclusively on data level assurance or data integrity, and what they're focused on is trying to come up with principles and criteria that would enable us to provide assurance on those different types of reporting where you're not even looking at financial reporting. You can't use the concept of taken as a whole because it's irrelevant when you're talking about something that's narrative in nature. So we are working on that piece in parallel, but we're trying to take some baby steps to lead up to that. I also wanted to mention that Don Warren was originally supposed to be part of this panel, as Nicholas mentioned this morning. Unfortunately, he couldn't be here. But the reason I have this slide up, which Bill presented earlier, is that it really covers what Don was going to talk about, which was the fact that this is a small step, but data access and data standards are necessary to get to the next level, to really start leveraging tools and technology and really make some meaningful progress towards continuous monitoring and continuous assurance in the future. So that's what Don was going to cover. I wanted to make sure we at least touched on that. Unless anyone has anything they want to add to the comments that were made already, we'll open it up to the audience. Do you guys have anything you wanted to
let me just add, we talked a little bit about cost, and it's not merely the cost of the ROI and the cost of implementation and the investment, which in our case, internal audit is kind of leading that initiative, but it's the timing of the test. So, if I had my choice, would I rather come to the end of the fiscal year and then respond to the prepared by client list by our external auditor, or could I give them a continuous feed of information throughout the year and ask them to do more linear testing, even if I don't recover the cost of that initial investment, the timing, kind of smoothing out that fiscal year mountain of doom when you have to respond to all the testing. If I could push that into the interim because they're doing, and I'm enabling more analytics and more continuous monitoring, then I can recover that, and my blood pressure goes down.
Yeah, I think that's key. If you can get a continuous monitoring is about proactive understanding of where those risks are and how to put mitigation controls in place. I think by doing what you're describing and doing it in a more linear mode, you have better visibility into what's happening in your business so that you can proactively control it. And it goes beyond just the risks and the audit piece, but it's also then about giving the company a sense of where do we need to take this business, where can we capitalize on some things that you notice in the moment versus an after the fact type of thing. And even continuous monitoring, and we're proponents of doing that in real time in a proactive way so that you get that perspective on what's happening with the business. So it's compliance becomes a byproduct, and it's really about creating efficiencies and driving performance enhancements.
Now, if we could just quantify the value of Brad's blood pressure going down, value proposition all tied up with a bow. We don't need to go any further.
Amy, one other thought, and that is, the GL and journal entry trial balance level will be good, but we really have to, for this to be successful in the long run, we have to get the data at a level of disaggregation that it's really useful. We have to be able to get it, inventory records, mortgage payment files. That's where the rubber's going to hit the road, and that's going to be challenging to say the least.
But that's the next panel, right? About apps.
I wanted to make one other point that I failed to make before. When I talked about the work of our Trust Information Integrity Task Force, we're actually collaborating quite closely with the Canadian Institute on that work. They've been thought leaders in that area for a number of years, and they're doing some tremendous work that they're sharing with us. So that's a collaborative approach, and we hope for it to be internationally relevant. So. At this point, I guess Nicholas will open it up to questions from the audience. Mr. Deprosini got his hand up first.
Very good. So a question and secondly a heartfelt plea. So the question is, in relation to the data standard, where does that stand in relation to XBRL, GL and so on? No point building a standard unless it relates to other standards. And here's the heartfelt plea from an academic perspective. Data, and more data that we can beat on from a research perspective is going to be really important. My colleague Glenn Gray and I think written the only academic paper on data mining journal entries. And the reason that there's only one paper is that the data set that we use fell off the back of a truck. Thanks to a very helpful provider that sent it by encrypted email, I think. We just really need, from an academic perspective, data sets that we can put PhD students to work on and then learn more from those data sets.
We hear that from Nicholas all the time. We're working very closely with the CAR Lab on this project. Obviously, we can't do it without the assistance of a team like Nicholas's and the work of PhD students and actual data to leverage in trying to conceptualize all of this. So that's something that we hear quite often. I don't know that we have the solution, though.
I just wanted to I don't know the question, but research follows data. Yeah. If we get data, there is a lot of idle professors that will be working on it. Meaning when KPMG had Audit, they funded some research, but the money wasn't that big. The reason why it became big because KPMG opened the doors to questionnaires, to accountants, and etc. So if data comes, you will get all this academic interest if you want.
Right. If you transfer some money to a bank account in the Cayman Islands, I'll get you some data.
Does anyone want to field the XBRL question, or do you guys want me to take that one?
I'll try and take a little bit of that. To answer the second question, I've asked the same thing. I mean, especially with the data sets over the past 10 years or so that are the fraud-related data sets, those would be phenomenal to have out there for research. Unfortunately, with litigation stuff, they get wrapped up and sort of hidden away. But if we could get some of those, or fabricate some of those, if you will, based on what those known frauds were, I think that would definitely help out with the research and moving this forward. On the second one, I think actually Eric Cohn might be the best person to talk about for XBRL GL. But we do want to try and match this up with the existing standards. So throughout all our discussions, we have said how can we leverage existing standards out there for XBRL financial reporting? So how can we map the low-level general ledger data up to the financial, and then how can we take advantage of XBRL GL? And we haven't precluded us from using that. Currently, what we've said is we're just going to extract it in sort of a column fashion to get it out. But I think we do need to have further conversations on XBRL GL and how it might play in there.
Yeah, one of the concerns was just file size, given the metadata associated with it. So we hear that over and over again. It's just a matter of addressing that issue and thinking about how we go forward. Because everybody is in favor of, using the standard that's being used for financial reporting, and that is XBRL, and we're all supporters of it. So it has been discussed at length, and it needs to be discussed further. Trevor.
There's a question following up a little bit about what Tom was saying. It has to do with kind of extensibility and also scalability. Have you guys given any thought to what the boundaries of this kind of standard might be? And I guess where I'm going is systems tend to be pretty complex, and once you get below the GL level, there's all sorts of variation, and that's kind of often where the auditor wants to play. And also the other aspect is scalability, because if you get like a Hewlett Packard, I mean, it's a huge organization, and when you go and do the audit of a Hewlett Packard or P&G or whatever, it has its own unique characteristics. And sometimes the standards don't necessarily apply when you go to work on that, whereas they might if you're dealing with a more kind of an SME or some sort of kind of company. So just a general question about extensibility, scalability, and whether you've given any thought to what the kind of boundaries might be around this kind of system.
Sure. I think that for the general ledger, we have taken into consideration when you do have those multinational large corporations, we said that, seldom are you going to find, especially a large organization that has a single ERP system or at least a single instance of that. So we do want a standard that will support many different ERP or GL packages around the globe, and it all comes together into one large file. So the standard should support that. The reason we took GL first is because that one we could get our hands around. Then we're going to move into that more difficult problem, which is how can we handle all the different issues, I guess you could say, with the data representation of the subledger modules. So we definitely are aware of that and looking to see how we can do it. And we're going to have to say, we probably won't be able to model everything. We're going to have to find those boundaries when we get there.
So from a practitioner standpoint, the audit data standard is a financial bounded standard, and about the GL and journal entries, it also tends to be in a space that we were already interested in, primarily because we're also monitoring routine IT general controls and automated controls, and we were kind of looking at the general entries because that's where you tended to circumvent the control environment is at the end of the period. And there was a few account balances that we had our eye on where 80% of the value was affected by journal entries. So, if you're getting comfort with your ERP, no offense, but if you get, and then you have somebody that's able to do a journal entry to counter that, we're looking at both sides of that coin. Now, so that means that what our database is actually looking at conditions and values and automated controls as well as IT general controls, and we'll get into unstructured data as well, which goes beyond the standard. However, we're building towards the standard because we also want to, like you said, multiple beneficiaries. We wanted the external auditor to rely on that. The hunch is once we get an external auditor, they'll rely on that. Then I can get an external auditor to start using continuous monitoring in other areas, such as IT general. Well, they're already kind of relying on the IT general control, but the unstructured, the text mining and stuff, we're kind of looking into as well.
Yeah, that's key. And then just a little bit from the system side. I mean, I think we need to extend the data standards outside of just that process into, say, some of these GRC solution areas, because it's going to be critical. Because HP, I think you run even 38 instances of SAP globally. Forget about even other back-end systems. So, what we've had to do, for instance, in that case, is can take all that data coming out of those ERP instances and put them into a central repository, which has become, say, a GRC type of system. So, extending the standards to that, and then marrying that up with where we're already leveraging standards like XBRL and our financial statement reporting capabilities for disclosure, notes management type of filing to extend to that last mile of finance. And that's going to be a critical area. So that's one thing that hopefully, as you take the first steps, the next step is looking at those systems that do touch multiple ERP, multiple instances, to be able to get the benefits out of it.
That's definitely the vision. Other questions? In the back.
From what I've been hearing, though, a lot of focus has been on getting extracts of data. Now, I guess my problem is that in audit situations, we're really just taking snapshots. And in fact, we're looking for outliers or abnormalities or exceptions, but these are all snapshots. When are we going to go at, when I think 21st century, when you take a whole bunch of snapshots and you put them together, what do you get? A video. When are we going to take continuous account auditing and monitoring and take the snapshots so we can build trends to help audit committees, management understand where they're going wrong before they go wrong?
Well, and part of the question here is access, right?
But I think there's a lot of things, and I think it's a great question, and one which I think everyone in the room wants to be able to answer as well. This is that first step. Once we can find out where it is, we're saying extract, but eventually it might just be feed right into that audit data warehouse, which may live at a client's location where the entire organization for operational reporting will use it, where you'll have the external auditors coming in while they're there to use it, or Bill, I think alluded to possibly storing it in the cloud. Wherever it is, I think it will become a constant feed. This is the first one just to define what it is and how we get it out of that.
The key then would be to make it small enough that you can model it properly. I mean, when you start saying, I'm going to do the general ledger, that's like one of the biggest systems.
Yeah.
Right.
You know how much data there is and how much, if you kind of scope it, you can build, you know how we started with motion pictures with the stick figures, you remember like the drawings? Yeah. We could take those snapshots and build a model that management can appreciate and understand. Because what we're doing is we're just taking snapshot after snapshot, and hopefully we're looking for that variance that's going to say, oh, I found something. But, how many things were not found? And again, from my examples this morning, that there's so many instances where people, oh my God, things went so bad. How could the auditors have let this slip? How did this happen? Because we don't have the tools right now.
I think you said right there. I think that's going to be a good discussion to lead into the next panel when we start talking about the apps on top of the data. So if we can get the data on a continuous and full population of data, we can build those apps that do look across the whole picture, not just a snapshot.
So let me comment on that. I think the intention of the concept and the standard that accommodates the concept is to predefine what data is required to infer the risk. And I agree with you. There's a tendency, especially when you get into transactional monitoring, to reperform accounts payable. And you just can't lever that. And so the notion is really to identify those audit significant, audit relevant data that when you piece it together, you can make a decision about risk. So it's a decision and support system. And like you said, to kind of scale it so that it's not carrying information that you don't need to burdensome, but just enough information to signal, to sense that there's risk and it's emerging. And I don't know if I need to send an auditor out, but I would probably communicate to a compliance community member or even controllership to say, do I need to send an auditor out, or are you going to take care of this? And to decision that into action. What the database and the model does for us is it shortens the time to management action. And even in my traditional audit, I'm an auditor, the notion of building and planning an audit, conducting 6 weeks of field work, negotiating the rating, going through the pain, the reward on our part, right? And the entertainment of coming to a management consensus and seeing action. That's probably about 3 to 4 months on a good day. And if it's cross governance, it's more like 6 months. So the notion that is why we're invested is if I can get a risk-based analytical system that will signal controllership to take action, I can do that a lot faster than I can through a traditional audit approach.
And someone might want to pay for that.
Maybe.
I think I saw one more question up front here.
Yeah, thank you. I just want to touch on something that Carl said earlier about ROI. I came in a little skeptical, but I'm starting to realize there might be an ROI. I wonder if any of you panelists have thought about integrating the work that you want to do with continuous monitoring, at least from an external auditor, with the public company SOX requirements. Because with SOX, the companies themselves, for their management assertion, they have to get the data. They have to get expense data. They have to get journal entry data. Have you ever considered either getting that data internally and just providing the same data to the internal auditors, or just relying on what's done internally and not keep pushing to the internal auditor like Brad to get the data? And we know he's got to get it for SOX because that's a requirement. So can any of you comment on that?
Well, I think it gets back to an earlier comment about piggybacking. If this is ever going to be successful, we, the external auditors, are going to have to work with internal audit and team up on this, because there's no sense each of us pursuing this independently. And I think we do that now. We rely a lot on management's own testing of their internal controls. We have to go, because of standards, we have to go back and reperform some of that independently. But I think we're doing a better job. There was right after SOX, we really distanced ourselves from internal audit for obvious reasons, and I think we're recognizing it didn't have to be quite that dramatic.
One last question.
Sure.
This is a far-fetched one, but I think this audit data standard is an essential thing. Now, if in the design, and that may be even directly to you, Carl, there has to be different versions. For external, for internal audit, maybe, and maybe for different type of entities. What would be this version? What would be the skew of data that would have to be specified?
I think there's going to be different purpose for how they use the data. Again, that might be a discussion for the different types of apps that are created. Some apps are maybe created specific for external audit. Some are going to be created for internal executive management. Others will be for across the spectrum. I think that at least at this point, when we're looking at the general ledger, we are looking at the same set of data. So at this point, we can commonly define that. Like Brad said, they are getting a whole lot of other information that is used primarily for other stakeholders, but can be leveraged by the different groups that are also using that.
So you think that your general ledger spec would satisfy my friends at Itaú and my friends at Procter & Gamble?
That's the intention. We would want the general ledger spec to be able to cross the spectrum of companies, complexities, and all that. We might find that there are going to be some places where we are going to have to draw that line and say it's outside of that, but the intention at this point is to find a standard that at the general ledger level would meet everyone's need.
And then as it matures, most likely having to go to the same extent that you do, say, under risk management, that's a by industry approach with very specific standards based on the industry to be able to monitor and control that.
Sure.
Yeah.
So the data modeling we're building towards is broader than what the standard is requiring. What our decision is to go where there's judgment. So transactions that require judgment, complexity, especially on the revenue side, is where we're kind of modeling with the controllership and with the compliance. Our expectation is the routine transactional would be taken care of by IT general controls and automated controls. It's when we rely upon the judgment of a human when people sometimes make poor decisions. So that's where we kind of build out our model. But while we're doing it internally, we also want to build the same mechanism, the same web-based capability that would enable an external auditor out of the common database.
And I think as we expand the standard into the subledger, like you're talking about when you're talking about revenue, you're down at the transactional level. So we'll want to work with folks that are creating these data warehouses today and different vendors that are creating. They have business warehouse objects today that support all the types of data we're talking about. We want to make sure that we're getting their input into this to make sure that we can be as broad as we can, but recognize where those limitations might need to be from a data standard perspective.
We don't have any more questions.
Most important question of any meeting is what the date of the next meeting is, and my question on that line is, when do we see an exposure draft on this that we can beat on?
Soon.
Can we define it soon?
Very soon. I would say probably an exposure draft could go out early in 2012, right? Because we have a really good draft already, and there's just been some feedback that's been given since the last version that we just need to convene the group to incorporate, and then once we do that, we'll be in a position to let people comment on it. So it's very actually quite far along, and so I think it will be very soon.
And we are thinking of issuing the exposure draft on the other cycles too, or we just take the general ledger?
Well, for now, general ledger because we haven't done the subledger work yet. We're actually, I think Dorothy shared with me this morning, thinking of using some of the apps that we developed to kind of back into where we think the most critical subledger items will be. So kind of a nice transition to what the next panel is going to be talking about with respect to the apps that will leverage this data.
Thank you very much.